Hi everyone, this is Isaiah Real, financial advisor with Laguna Wealth Advisors. Happy 2019. This is my January 2019 market update. So today I'm going to show you a quick story as to why it's important to stay in the stock market through good and bad. Let me give you a really quick story. Let's take a fictitious guy. Let's call him James. Let's say James has been investing in the stock market for 30 plus years. He's seen it all. He's been through the good markets. He's been through the bad markets. He's seen a lot. October 1st comes of 2018, the beginning of the correction. Markets go down in value. Well, James has been here before. He's seen what happens. Okay, we're going through a correction. Yes, it's going to be down. I don't like it. I don't like seeing my account go down in value, but I know markets are going to pick back up. November rolls around. To begin the month, stocks start going down lower. James starts saying, you know what? Again, I don't like this feeling. I'm starting to think to myself, should I be selling investments? What should I be doing? Because I don't know when this is going to end. After he starts thinking that, markets start going up and again in value. And he sees, okay, here it is. Here's the correction. We see the markets go down. He's seen it pick back up. He's seen this before. Okay, but he's still very concerned because, hey, should he be selling something? December comes around. Complete free fall. We had the worst December since the Great Depression. At this point, James is starting to really panic and he says, you know what? I'm going to sell my investments. I don't want to see my money lose any more value. I'm scared. I sell out. He sells his investments, puts the monies in cash. And he's content because he's not going to see any more losses. He doesn't want to see his account go down in value anymore. And you know what? He's good. He's in cash. Let's fast forward to January. Let's fast forward to the end of January. We had 5.5% returns in the S&P 500. We had 7% returns in the NASDAQ. We had the best January in 30 years. Now James is hitting himself on the head because he sold his investments when the market was down. He sold his investments at the bottom. And now markets are up to 5.5%, 7%. He's kicking himself. Because guess what? If he wants to get back into the stock market now, he missed out on 5.5% and 7% returns for investments. And he has to buy his investments that he bought at very low prices years ago. He has to buy his at higher prices, so he's kicking himself in the head. So my friends, I want to share that story with you because what I'm trying to share with you is it's important to stick with it if we can, because there's opportunities that we may miss out on. For example, the 5.5% and 7% returns in the markets this year. Yes, we had a very bad December, but if you've been in the markets for long enough, you bought these investments very cheap or years ago. And so we still have a lot of returns on these investments most likely. And so through good and bad markets, it's important to try to stick with it if we can. I know it's scary. I know it's difficult. I know it can be hard to see our money lose in dollars in our accounts. But the thing is, corrections go down, but we continue to go back up. So with that being said, let me share with you my thoughts on sectors, my thoughts on investments. Sector-wise, there's 3 sectors that I'm focused on right now to begin 2019. They are, number 1, technology. Still the number 1 player out there. Even with markets down here the last 3 months to end 2018, and of course now we're picking back up. NASDAQ was up 7% in January. Technology is number 1. Number 2 is healthcare. I've talked about that quite a bit. Healthcare was one of the sectors that gained relative strength buy signals during this correction. What does that tell you? The sector is very strong. So number 2 is healthcare. And number 3, I've talked about this, utilities. Utilities is picking up buy signals during this correction. So that's an area that I'm taking a look at for myself and for my clients moving forward. Some thoughts that you can look at going deeper in these sectors is for technology, again, you can look at the big internet players, you can look at software, you can look at cybersecurity. Those are some areas you can take a look at. When it comes to healthcare, you can look at big pharmaceutical companies, you can look at biotechnology, you can look at hospitals, medical devices. Those are some areas to take a look at if you want. And utilities, utilities to get a little more specific, but I'm looking at, the major utility ETFs out there is what I'm looking at for myself. Again, if you're interested in these investments, make sure you do your diligence first. Talk to a financial professional. See if this is the right fit for you. Again, I just want to share some of my thoughts and my research that I've seen for myself and doing for my clients, and I want to share some of that with you. And so, my friends, that's what I want to share with you today. That is my January 2019 market update. If you have any questions, if you have any thoughts, please feel free to let me know. My indicators are telling me buy signals right now and positive momentum moving forward. If anything changes, I will let you know, but it's a good start to 2019. I look forward to talking to you again soon. Thank you so much. Have a great day. Take care. Bye-bye.